Hello, 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 hello. Right, mic's working. Right, okay, boys. The mic's working. Good, good. I hope everyone's well. Basically, what we're doing is finding liquidity sweeps. I'm going to show you how to find liquidity sweeps and how to use liquidity sweeps to your own favour. So let's just jump right into it, man. Sweeps. We can see this is a clear example here, by the way, boys. Easy example. Price comes and sweeps is high. But just before this, look what happens. Price comes and it sweeps is high. So let me explain this real quick. We have liquidity sweep and liquidity purge. A liquidity sweep is when price sweeps a high and then drops to the downside. So see here, price sweeps the high, drops to the downside, targets the lows, low, low, liquidity pool. Easy trades, boys. You lot have been with me from the start as well. Most of you lot, I've come a long way. But yeah. So sweep liquidity and then push to the downside. How do we use this in a trade? After we've got our daily bias from the 4 hour, I don't really use a daily that much. You just don't need to use it. You see the sweep? We have a break of structure here, the retest of a fair value gap, and we have the continuation. We're just targeting lows, can target that imbalance right there. Small stop loss, because with this strategy that I use, you will never need a big stop loss, boys, if you get optimal entry. So yeah, sweep, and what we're going to do, we're going to target lows. That low there, also an imbalance. You see there, an imbalance is basically just a big gap in a candle with a lot of buying orders in or selling orders, so that there's a lot of resting orders here. See, when price starts pushing, and it's pushing the strong, it's because it's pushing through loads of orders. That's where the liquidity comes from. You never want to be trading in a market where the volume is low and when there isn't really much liquidity. You don't want to. Those are the days. You leave, bro. You dip. You can see here, this is a good example. After we take this pool of liquidity and we sweep low, it happens again. We leave an imbalance. We start rejecting off the imbalance. Rejection, 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 rejection. Break structure to the upside. After the sweep, get entry and target these highs. That's another 31 pips with what? No stop loss even needed there. Optimal entries. These are my targeted out liquidity pools as well. So yeah, how to find them, how to use them. I mean how to use them as in, so like here, this is a good example. After we sweep these lows, what are we going to target? We're going to target the highs where we've been, look, sweep here, price sweeps, dips, big liquidity pool to target. Imbalance there, gets hit. Imbalance there, gets hit. Imbalance here, gets hit. You get where I'm getting at, boys. We're basically finding the liquidity and then we're looking where the liquidity is going to transfer, because the liquidity is going to be found in one place and then transferred to another place. And if you can find it and then you get on that order, that buy or that sell, to transfer to the nearest liquidity pool, you're going to be making bread. So what do we do here? We find the sweep of liquidity, price test a fair value gap, pushes off. That's our first confluence, that rejection. Retest this fair value gap, and then we see, okay, we're rejecting twice and we've had a sweep. Now we can get in on that next rejection, target the highs, target that high, imbalance, 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 loads of liquidity. Target this imbalance up here, 93 pips. Does it get hit? Yes, it does get hit. And what's the stop loss like on this? No stop loss needed again. This strategy I'm using, boys, it's insane. You can trade this as well. Sweep high, drop low, retest. Do we have a fair value? Probably in the 5 minute. Then we see rejection, price push low, keep pushing. We get entry, and we target these lows where all of this liquidity is. See that? How many orders are getting accumulated here, boys? And they're all going to get targeted. Banks use liquidity to stop people out. And then when they stop people out, they're grabbing even more liquidity and they're just transferring it to buy side, to sell side, to buy side, to sell side, to buy side, to sell side. And banks always trade in discounted areas as well. That's why you see places like this see big pushes because they're buying low, and then they're selling high, buying low, and then they're selling high, buying low. That's how it goes, boys. But yeah, that's another 43 pips using the sweep. Sweep low here as well. Price push, we get the retest of an imbalance. We can enter this here with a target of something like this inverted imbalance here. And it does get hit. That'd be a bit of an early entry there. This is a very good example. A very, very, very good example. So, consolidation. How to use liquidity sweeps in consolidation as well. This is very important because it's useful. When we see that last sweep low here and we take out these orders and we tap into this imbalance, even that right there, we know, okay, so the liquidity is above liquidity. Take out this last high and break out of the consolidation. That's exactly what we do. On this last rejection, you can get a buy entry. Target that 45 pips. And then what do we do? Sweep this high, sweep this high. So we're getting multiple sweeps here. Sweep, sweep, sweep. These are purges. These two, we purge through that. We purge through this one, grabbing liquidity. And then the last sweep, we sweep it and then we transfer it to the downside. Sweep that liquidity. We break structure to the downside. We get that continuation here. Break after the sweep. I'll continue. Can target this imbalance. Target these lows. Big liquidity pool. Pretty sure this is an order block. Yes. Bullish order block gets created down here. We target that. Let's see how stop loss in that big. Look at that. Basically no stop loss needed again. 11 pips. 11 pips to catch 100 pips, boys. That's a 200k trade right there. That could be 100k, 150k, 200k, 10k, 50k. A lot of money can be made in these trades. A lot. But yeah, I'm not going to make this video too long because I did already make it, but then the audio wasn't on. But I hope I explained everything well to you lot. How to find sweeps, how to use them. Because after a high gets swept, it's going to start pushing low. That liquidity is going to be transferred low because it's easy like that. It sweeps high, we push through that, and then we drop it all to the downside. Where banks can also buy in a discounted price. If you're on the 4 hour here, go back to this trade. I don't know. I'll go back to this trade. Price also swept these highs as well, but where are we? From the last validated, actually now we can use this. High to the low. Price goes low and it comes into discounted price. Do you see that, boys? This is why this trade's so good. After we get that sweep of liquidity and price comes into a discount, this is a perfect place for banks to buy. To sell, I mean. Banks sell. Easy trades. Order block is created. We start pushing up. We can target these highs now. the 4 hour is where you should find your daily bias, and I'm going to make a totally separate video on that. But yeah, I hope you enjoy the video. I hope it gives some value. Leave a like, subscribe, drop a comment, boys. We're coming to the top. Much love.